Welcome everyone. So we're going to discuss a monthly financial planner that you can do easily on your Excel sheet. So why bother doing this? What is income? What are expenses? What do you mean by savings? And then we're going to actually go to the Excel template and then see what to do after this. So why bother doing this? If you don't have a plan, any road will take you there. So if you have a plan, you know where you're going. Another very important thing that you have to consider is, do you want to survive or do you want to thrive? So if you make a robust financial plan, you know exactly where you're going and you know what will happen if you keep doing what you're doing right now. You can also use the financial template to make better decisions. Why? Because you can actually visualize what's happening every month throughout the year and what's happening at the end of the year. So let me break this down. We have three main components. We have the income, expenses, and savings. It's a very simple formula. Income minus expenses equals savings. So in order to increase your savings, you need to either increase your income or reduce your expenses. What to actually do with the savings, I'll be talking about it later in another video. So let's talk about income. Simply defined, it is the cash coming into your pocket. Three main components of income. So it can be salary from the job that you have or business. Then you have side hustles. You have dividends saved from stocks or real estate cash flow. Next, expenses. So expenses are just cash that's going out of your pocket. So again, it can be broken down into three different segments. You have essentials. So those are the things that you can't live without. Food, rent, electricity, Wi-Fi. Then you have entertainment, like going out with your friends to movies, dating, all those kind of things. You also have things like paying for the car or mortgage. So those are the expenses. So what are savings? Like I mentioned, it is income minus expenses. So that's basically the cash that you keep. Hello everyone. So we're going to do the monthly financial planner. We're going to start off with our headers, right? So the main header that we have is income. And the different types of income that we have are salary, side hustle 1, and side hustle 2. So these can be things like YouTube or any other thing that you're making on the side. You're making a course, you're selling it, you're selling product. That will be your side hustle. Then you also have real estate, right? And then we're going to have a total at the end. For all the incomes that you're getting, most of them will be taxed. So we're just going to put a tax bracket over here. And so we're going to get our net income. Oops. Then we're going to go to our expenses. So that's our next major subheading. So expenses can be broken down into 2 or 3 different headings. So the main thing is essentials. So this will include your rent, water, electricity, heat, cable, maybe Wi-Fi, and food. Next we have entertainment. So we have gym, movies, say dating, and other random things. Then you have your car if you're leasing it, so you have your car payment, or if you have bought it and then you have a monthly installment, as well as gasoline. Lastly, you have your house, so that's your mortgage, right? And then we have other things that aren't mentioned in the list. So now we have our total expenses. Last subheading is savings, and we have total savings. Now we're going to divide this up into different months. So we're going to start with Jan, and we're going to go all the way to December, and we're going to get a grand total. So we're going to assume that anything in your first month is going to pretty much be the same for all other months. So for example, if your salary in Jan is $5,000, in Feb, March, April, all the way to December, you get $5,000 per month. This is just to simplify it. Obviously you can plug in your own values for each month if that's changing. So let's assume that for the month of Jan, you're getting $5,500 as your salary for that month. For your side hustle, let's imagine you're making 500, for the second side hustle 100, and you're not making any money for your real estate. So for all other months, you can basically just anchor this and drag it all the way down so it kind of copies that. Then you just move it all the way to December, right? Your total will just be the sum of all the months individual statements. So for your salary, you have the sum of all the months all the way up to December. So that's $66,000 that you're making as your yearly salary, and you just drag it to get all the others done. So this is your yearly total. We also want to check how much we're making at the end of the month when you add up all your incomes. So that's just going to be the sum of all of these, right? All of these basically, and then you just drag it all the way. So you're seeing that you're making about $73,000 at the end of the year. Now, all this money that you're making, you can't really keep it because there's a tax to it. So I'm just going to assume, just for simplicity, that the tax amount is 35%. So 35% of all the cash that you make is going to the government. So we're going to do this. So per month, so you're going to multiply the amount that you get per month into 35, right? So what we're going to do is we're going to anchor the tax percentage. So that's the E10 cell, right? So we're going to anchor it so that when we drag it, the tax percentage doesn't change, but then it kind of slides across this column. So we're just going to drag it, and we're going to sum this up, right? Sum. So that much is gone. So how much are we actually keeping after the tax? So it's earning after the tax. We're going to add these two columns or rows, and we're just going to drag it all the way across. This is the sum. So we're essentially having $47,000 after paying the taxes. Right? So now let's move on to the essentials for expenses. Let's assume, so just like the income, we're going to assume that the rent doesn't really change month to month. Water kind of remains constant. So since expenses are money going out of your pocket, you're going to keep it as a negative sign. So let's assume that it's going to be $900 as your rent. Water is say 25, 45, cable let's say 30, and this, let's keep it at 35, and food, let's say $500. So obviously you can change these values according to what you are actually dealing with, and we're going to do the same as what we did for the income. So we're going to anchor the cell, and we're going to drag it down and all the way across, right? And so we're just going to take the sum of everything, so it's fine. Let's move on to the entertainment. So again, we're just going to make up some values. $50 for gym, movies say $20, 100, and random things minus 50, right? Gonna do the same. And drag it all the way across. Right. Now let's talk about your car. So you might have bought a car, but then you have monthly installment payments that you have to make. Let's assume that you're going to pay $400 per month, and the gasoline that you're going to use per month is $200. You're going to do the exact same thing. We're just going to anchor the cell, and then we're going to drag it. So once I've done it, I basically just copy pasted the formatting so that it's sort of easy for me to do that. And that's done. And let's say you don't have any mortgage payments at the moment. We're going to assume that's 0, and we're going to just drag it all the way across. And this is the total for this, right? And you have no other expenses. Now if you do have some other expenses, you just add it to this section, and you just drag it and find the total sum. So the total expense cost for 1 month will be the sum of all of these rows, right? So you're just gonna add all these up, and that is your total expense for the month of January. There we go, Jan. Now we're gonna drag it all the way to the end, and we're gonna sum the total thing. So the grand total for the year is $28,000 that you're going to be spending. So savings, that's the last main header. What are we going to do for that? It's basically the amount of money you have left after you spend some money on expenses. Since there's a negative sign already, you don't have to again subtract it. You just add both of these columns. Just this, add it to the total expenses, and this is the amount of money you have left, right? And at the end of the year, you're making $19,320 as savings. Now what you do with the savings is up to you, but that's how much you have left after you use up all the money for expenses. Now, the way you can increase your savings is basically either increase your income or reduce your expenses. Now, some of the things that you're going to be having as expenses, you can't really reduce. So the best thing you would want to do is basically increase your income, right? So we're going to focus more on that on a different video. So let's look at the analysis of what has actually happened here. So if you look at savings percentage, so that is the amount of money that you keep to the amount of money that you've actually earned. Now, I don't really like using the total income column for this. I like to use the net income because you can't really count the amount of money that you've given to the government. So I'd like to take the ratio of the savings that you've earned, so that's 19,000, to the net income, which is 47,000, and we're going to find out how much we have as a percentage. So that's your savings percentage, right? So we're going to do that. It's going to be this divided by this. So we're going to see that it's 41%, right? We're going to do the exact same thing for expenses. So for expenses, you're going to see that it's 28,000 that you've actually spent from whatever you've earned after taxes, divided by the total, the net income, right? So that's this. We're going to put a negative sign just because there's already a negative over here. So we're going to get the percentage as positive. So 60% of all the money that you've earned has been spent as expenses. That's what it means. Ideally, you want to keep an emergency fund, and if you notice, this is in case you lose your job and you basically need time to find a new job. So you have to sustain yourself without relying on the kindness of strangers, right? We're going to take 6 months expense as your emergency fund, right? So 6 months of expenses is basically this. So this is the expense per month. We're going to multiply that by 6. There we go. 14,000 is your emergency fund amount that you need for 6 months. And lastly, how long will you actually take to make this emergency fund, right? So it's basically the amount of savings that you have. How long will it take to reach 14,000 is what we're trying to calculate. So it's 14,000 divided by the savings that you make per month. So we're going to see that it takes 8.78 months, so that's basically 9 months to make 6 months of emergency fund, right? In terms of years, it would just be 8.78 divided by 12.73 years. So what you can see is basically that you can make the emergency fund within the end of the third quarter. So again, why are we doing this? Because we don't want to rely on the kindness of strangers. You want to make sure that your life is set up, that you can visualize what you're earning, what you're spending, so that you know exactly how much you're saving and how you're going to use that saving to make more money so that you can live a better and happier life. So again, like I mentioned, it's hard for humans to actually understand what's going on when they look at tables. So we're going to look at a pie chart, to just see a few things. So we're going to go to this. So I've already pre-made this. It's pretty simple. So you can see that 90% of all your earnings is from the salary. So from whatever I've made in the Excel. So for you, it's going to be a different percentage. And for your side hustle, it's going to be 8%. So this depends on how much you've actually earned for each of these headers. So if you look at it, 66,000 as a proportion to 73,000 is 90%. Right, so we're going to do the proportion for each one, and then we're going to draw this pie chart. And so one of the key things that I want to talk about is that if any one source of your income, so in this we have 4 sources of income, if any one source of your income is greater than 50% of your total earnings, then be careful, because you have a lot of eggs in one basket. If you don't guard the basket, you're going to have a hard time later in case something happens to it. Now let's move on to the expenses. So if you look at expenses, we're just going to check how different categories do. We're going to see that 65% of all the cash that's going as expenses are for essentials. So when you look at essential, it's rent, water, electricity, food. You can't really get rid of these. You can't really reduce your food intake or electricity bills, because you need that to function. To make more money, you need it. If you look at it, 60% or 65% is going for essentials. Then you have 9% for entertainment and 25% for car or whatever else, right? The key takeaway from this is basically that if your expenditure on essentials is higher than all other expense categories, that means you're merely surviving, you're not thriving. If you look at the rich top 1% of the world, they're not really spending 50% of their expenses on essentials. They have more than enough money to cover that, and they're basically enjoying their life, spending it on other things, maybe even investing in the money, right? So you always want to make sure, how can you get your life to a better status? How can you increase the entertainment value? Life is not all about just, saving the money and then spending it on essentials, but also entertaining yourself, keeping yourself happy, keeping the people around you happy. So this is something that you need to look out for. Make sure that, yes, obviously when you don't have the money, you want to be spending it on essentials and using the other cash to invest it. But then you also want to make sure that you're living your life, you're experimenting new things. So that's why I have this pie chart. And that's it. It's a pretty simple Excel sheet, right? Anyone can do. So now, since you've actually seen the template, go out and make one for yourself, design it the way you want to. The whole idea is that you can actually see what's going on every month, that you can plan so that at the end of the year, what's going to happen, and you get to know how long it would take for you to build up your own emergency fund in case of a contingency that's going to happen in your life. Hope you enjoyed this. Subscribe for more content.